everyone. Welcome to ET Markets CryptoMeet, a platform where we discuss with thought leaders on all things crypto and blockchain. And today I'm in discussion with Richard Turin. Richard is an author of Innovation Lab Excellence and Cashless China, the only book on China's central bank digital currency project. So Richard, welcome to today's discussion. And I would like to get your views on how China is undertaking its central bank digital currency project. And since you have been living in China for more than a decade now, give us a sense of how China is implementing this particular project. Richard, over to you.
Thank you so much. Hi, Sharat. Nice to meet you here. And welcome to everybody out there. And I'm honored to be here on CryptoMeet. And let's dive in and let's talk about China and their central bank digital currency, which for many, you're going to hear me say CBDC, except I'm going to say it really fast. So CBDC. So just so we're clear on that. All right. So look, where are we here in China? I've spent the last decade here, 11 years to be precise, and I've watched China go from bundles of cash that I used to use to pay rent and to do other things to electronic payment now through the payment platforms, which are WeChat and Alipay, which many of your listeners may know. Now China is taking the next step, and the next step for China is a CBDC, or a digital currency that is actually issued by the central bank. So please do not confuse this with cryptocurrencies like Bitcoin. So where are they? So China built this thing and it's in operation. And as of June 30th, 2021, they've got more than 20.87 million people who have used it and a total transaction volume of RMB 34.5 billion, which is still tiny relative to the amount of mobile transactions that you see on WeChat and Alipay. So different units, but WeChat and Alipay in 2019 did 52 trillion US dollars in payments. And here, central bank digital currency in trial is looking at around $50 billion. So still, around $5 billion, pardon me. So big difference there, but still remember, this is trial. Now, what are the trials? How do they work? And why are they doing them? Let's do the last question first. Why trials? Any country, including India, that will someday launch a central bank digital currency is going to have to ensure that it integrates with society. This is a big difference. Or think about cryptocurrency, Ether or Bitcoin. They're sort of thrown out there and you say, well, use it. This is the coin, you figure out how to use it. You can't do that if you're a central bank and you want your entire society to use your new CBDC. You have to be very careful and roll it out a little bit at a time to test it, to make sure it works, and to thoroughly integrate it into society. So that's why they're doing it this way. How are they doing it? They're doing it a city at a time. So many people may be familiar that last September of 2020, the first trial in the city of Shenzhen was tried. And what they did was they actually ran a lottery. They gave away money. Everybody loved that, right? So they gave away what are called hongbao, or red packets, which is what you get for your birthday or for a holiday. Your elders will give you a hongbao, right? So what they did was they gave away a little 200 RMB digital hongbao to people so that they would try the digital currency. And so they did that in Shenzhen first, then they did it in Chengdu, they did it in Xi'an. They're trying it in all these different cities. In each city that they roll it out with, they learn something new. And that's the important thing. Look, you're not going to build a central bank digital currency and just throw it onto society and say, okay, everybody use this. It's got to be trialed. It's got to work with the local banks. It's got to work with retailers. It's got to work with online retailers. There are all these different, what China calls application scenarios, and they have 1.32 million scenarios tried. Not all of them are super complicated. It means personal a person used it to buy a train ticket. That's one. A person used it to buy something else. That's another. So but each one of them has to be checked to ensure that it works. So we've got the why they're doing it. We've got the how they're doing it. We've got some numbers already for their early successes. And what are they learning? Basically, the PBOC is learning that each of the bank systems, which may be different by province, are being tested. And when they eventually do roll this out and flick the switch for everybody and say, okay, go, it's officially live and it works, you can expect it to work flawlessly out of an abundance of caution now. So do expect that whatever other country, major country, has a CBDC, you can expect that same sort of trial period to ensure that it works well.
Thanks, Richard. In fact, I would like to get your view on the super apps, because we have Alipay and WeChat Pay in China, right? So how did that transition going to happen from the super apps to the CBDC? And will CBDC be disruptive to these super apps, their model? How that will play out?
Yeah, that's a really great question. And it's a great question for two reasons. The first reason is that it's really important to understand that China is not going from zero to central bank digital currency. There was a step in between, and that was the use of WeChat and Alipay, the digital payment platforms, which really drove China to become cashless in most major cities. Some of the smaller cities are not quite as cashless as, say, Shanghai, where I live. But there's been this intermediate process, okay? So it's not 0 to 1. It's this progress where Alipay and WeChat Pay designed the QR code system where everybody swipes a QR code to pay. People are used to it. It's an integral part of society. We all know how to use digital money. So when central bank digital currency comes out, everybody knows how to use it. It's not like you have to train people, or it's not new to China's society. What happens behind the scenes is, of course, new, but the concept of scanning the QR code is well understood by everywhere. Now, let's look at the second part of it. And this is really also important because I hear this all the time. Ready? The general internet meme is as follows. WeChat and Alipay are going to be killed by the central bank digital currency. And many people look at it as what's called a zero-sum game, or more simply put, a pie. And the pie right now of digital currency is all there is ever going to be. And if you put central bank digital currency in there, it's going to take away from the digital payments from WeChat and Alipay. That is true to an extent, but it's fundamentally wrong. This is not zero sum. The pie isn't just one fixed size. The pie is going to get much bigger. Let me explain. So digital payment with WeChat and Alipay is great, and we use it for paying rent, all of our personal payments, and a lot of small businesses use it for all their business payments. But still, for example, if you work for a big company in China, you don't get paid your salary by WeChat or Alipay. You get a normal bank direct transfer, right? But now we've got a digital currency. And what it's going to do is it's going to digitize payment streams that Alipay and WeChat Pay would never touch. So let me give you an example. JD.com, the big online retailer, has started to use digital currency to actually pay a small group of employees who are active in the digital currency project. So they're actually getting salary or portion of their salary paid in central bank digital currency. Then you've got two new really big experiments, which are interesting, which were actually high value payments. One of the futures exchanges just made a payment. All we know is that it was above 500,000 RMB, and they used it to pay a warehouse. They have to pay a bill to a warehouse to store corn and coal or whatever physical. So they used it for that. And now the banks are looking at it for purchasing, for people like me and you to actually purchase stocks and securities online. But so that's an area where Alipay may have been used for the bottom, but they're looking at it for large purchases. So there's this whole concept that we're going to use central bank digital currency in ways that Alipay and WeChat Pay never envisioned. Big payments, little payments, and payments that would not have normally migrated to the payment platforms. And they're great. I got nothing but great things to say about WeChat and Alipay, both.
Right. And there were recent reports saying that China is also planning to use CBDC for buying pension, insurance, and funds. So how do you see that playing out? Will that be another extension or, let's say, revenue for these super apps?
Actually, so that's a great question. And I think that's going to be taken off the super app. So look, right now with the super app, you can buy insurance, you can invest your money, and that's great. But I think there's some limits, and I'm at a loss as to how much you can buy at a single time. But the banks are getting a hold of this, and they're saying, look, we know that people want to invest using a digital platform. It's not a secret. WeChat and Alipay showed that you can do this. Now, the banks are going to go the next step, and they're going to say, look, pension or other larger scale payments are going to be able to be made using the central bank digital currency. So again, it's this concept of not being zero sum. It's not like all of the digital payments in China are done. WeChat and Alipay found them all. No, it's this concept of making digital payment go deeper into society, making payment streams go digital that were untouched by the payment platforms. So it's a brave new world, and we're going to see China going digital at a level that we really haven't seen yet. And many in the West can't even envision because, if you look at the US experience, they're still writing checks and waiting for the check to clear for 3 to 5 days. Forgive me, I live in that world. I live half in China, half in the US, or a third in China, a third in the US, and a third in the EU. So yeah, I live it.
So Rich, you have spoken about how the center of gravity for innovation is moving towards East. And if you look at projects like Project Bakong and also some of the CBD projects by island nations, how do you compare these two with respect to island nations and the success of Project Bakong, where you have more than 200,000 wallets being used and close to 1.5 billion transactions on Project Bakong? How do you see that playing out? And do you think Asia is going to take a lead in the CBDC race?
Sure. Let's, so there's sort of I have three answers for you for that. First one is Asia is where it's at. Full stop. Ready? The center of gravity of innovation is moving away from London, from the US, from Silicon Valley. And you know where it's moving? Straight east or west, depending on your point of view, but it's all moving to Asia. 7 of the world's top 10 most advanced CBD projects are all in Asia. And if you think that's not, if that's not an earthquake or a disruption waiting to happen, it is. So kudos to everyone in Asia and everyone in India. Look, India is a great example. India's got the UPI payment interface. It was groundbreaking, years ahead of many others. And again, led to this tremendous explosion of payment apps and payment systems like Paytm and even the big ones like Google and Apple and Facebook. All of them jumped in once UPI, and you saw this tremendous burst of innovation. And that's just the beginning. There's more to come. So Asia is the heart of innovation for fintech right now in the planet, no question, and we can all be proud of that. Next thing, developing countries and CBDC. Okay, so you mentioned Project Bakong in Cambodia. You mentioned the Bahamas, and let's also mention the ETMarkets project. Okay, help me, which is in Nigeria.
Yeah.
Right. So, and then we got one more I want to mention as well, which is Dcash, which is a project which is in the Eastern Caribbean zone. Okay. So I know that China gets a lot of publicity because it's the biggest country, but all of these little CBDCs for the Bahamas, for Cambodia, they may be small, but they have the hearts of lions. And the reason is they are fulfilling CBDC's greatest mission, which is to bring financial inclusion to people. If 100 years from now, we look back on digital currencies, there will be one overriding benefit that they brought to mankind, and that will be bringing banking to the unbanked. So look, let's look at the Bahamas. They have lots of little islands. There's no way you can build a brick and mortar bank on these little islands. There's not enough people to support it. So they do cash, and some of them may have some forms of credit cards, but their credit cards are fundamentally expensive. They're built on a payment system that requires a vendor to get a 3 or 4% charge, at least in that market, for swiping a card. People don't want to pay that, and how can you blame them? So we're looking at an era of free payment, and CBDCs are bringing this to small islands, developing countries. And ready? Developing countries, the gains for launching a CBDC in a developing country for financial inclusion far outweigh the risks. Now let's compare and contrast this. The US, for example, has rightly said we're not in a rush to build a CBDC. And I don't blame them. I think they're too far behind, but we'll leave that for another question. But the point is this: the US, because it's the #1 reserve currency, has tremendous risk associated with building a CBDC. They have to get it right. No argument. A small developing country says, well, our currency is not super international. We have a large unbanked population. For them, a central bank digital currency makes perfect sense. And that's why for India now, the Reserve Bank's central bank digital currency project is wonderful. And I couldn't support it more because it's going to bring banking to an entire population that doesn't have it. And that's what central bank digital currencies will be remembered for if we were to go to 100 years in the future and look back.
You talked about US project, right? And since US has kind of slowed down, if I can use that term, right? So do you think China has the potential to become a regional reserve currency and reduce its dependency on dollar for the trade it does?
Yeah, that's wonderful. And I really like the way you phrased that perfectly, which is regional reserve currency. Look, the dollar is everywhere. It's in stocks, it's in bonds, it's an investment, it's buying oil. The concept that the China's central bank digital currency is going to come along and suddenly collapse the dollar. No, not going to happen. What it can do for China is two things. The second one you mentioned, which is reduce China's dollar dependence. Now, that's very different. Let's make sure that all of our listeners get this. That's not the same as China is going to sell all its dollar investments, not use the dollar anymore. No, the dollar is ingrained in China's economy and its central bank holdings. They have a lot of dollars, so it's not going to go away. But what they can do is, because China is the world's single largest exporter, is to start to transfer exports and trade from dollar-based trade to digital RMB-based trade. And that'll make it cheaper for many countries to buy stuff from China. Think about Nigeria. We talked about it before. Right now, if Nigeria wants to buy something from China, they have to go from Nigerian currency into dollar, from dollar back into RMB. They have two legs of a currency transfer. If they can do business directly through CBDC, directly from the ECD to to digital RMB, it's going to save them time and money. It's good for them. And that's the sort of transition that China is looking for. Now, that's the part where we say reduce the dollar dependence. Now, the next one that you asked was really good about the regional currency. 7 of the top 10 CBDC projects are located in Asia. And the 2 main BIS, Bank for International Settlement, projects for transferring from a CBDC from one country to another are where? Singapore and Hong Kong. So what you're really looking at is Asia taking off as this center of excellence for central bank digital currency and a center for CBDC transfers. So who's got the biggest economy in the region right now? It's China. Who's the first for central bank digital currency? It's China. Which country is already gaining converts? If you look at Indonesia, there is a government policy from Indonesia to de-dollarize, to increase the amount of RMB used in trade, not digital RMB, just RMB right now. So what you really are looking at is, hey, China's the big manufacturing center. They buy tremendous amounts of components from Korea, from Japan, and they sell. So you're really looking at a future where, and it's not way off, you're looking at a future that within the next 5 years, maybe 7, that you're going to see direct central bank digital currencies transfers, and they will be between the Asian nations, and they are going to become potentially, the RMB will potentially become a regional, a bigger regional currency than it is today. It will not become the global standard, but certainly within the region and with its trading partners, it will have a big leg up. It'll raise significantly.
Let's also talk about the usage of CBDC in cross-border payments. So we have 2 projects. One is CBDC Bridge and Project Dunbar, which was announced by MAS and BIS last week. So how do you think these 2 projects, is with respect to CBDC, where you have Hong Kong Monetary Authority, Bank of Thailand, People's Bank of China, and Bank of Thailand, if I'm not wrong, working on one project for multiple CBDC, and we have Project Dunbar, where Singapore is there, or Australia, Malaysia are there. So how do you think these 2 projects will play out? And do we will we see again silos of regional currencies coming up? How do you see that collaboration happening?
It's a wonderful question. So let's make sure everybody knows what MCBDC stands for. M is for multiple. So here's the thing. China is building a central bank digital currency. India is building a central bank digital currency. Thailand, Korea, Japan, all of these central bank digital currencies. Here's the thing, folks. None of them are alike. Each one of them is custom built for the needs of the country which they're being used in. So, you've got different technological standards. So there's no automatic way to connect Thailand with China. You need an intermediary. You need something in between. And that something in between is the MCBDC, the multiple CBDC platform. And what it is essentially a blockchain platform, which takes money in on one side, converts it to the other money, and sends it out. But it does this at a central bank level. So what happens? If you notice that I didn't say something there, I didn't say bank. I said central bank, okay? So the big thing is, so right now when you change money, you go through the SWIFT system, all right? And you take money, you pay a fee to your bank, whichever it is, bank X, sends it through the SWIFT system. It actually ends up in what's called a correspondent bank in another country. There's banks, there's fees, there's time, it's complicated, right? And all of that process, as anybody who's ever sent money abroad, it's expensive. So what we're now looking at is a system which is central bank, blockchain platform. What happens there doesn't matter, but boom, the money is transferred. It comes out the other side. It arrives in your digital wallet in a matter of minutes, hours, probably minutes, realistically minutes, rather than days. And if you think that there isn't somebody out there who does trade in another currency, who is not thinking that this is a great boon to their buying and selling from whatever country, yeah, you're right, it's huge. And it's highly disruptive to the existing banks who make a lot of money from charging everyone to move money around. So that's what MCBDC does. And that, both of the most advanced platforms for experimenting with this, it's still experimental, it's not up and running, but here, ready? Moving money with blockchain isn't rocket science. They're going to crack this. Ready? We've got a huge, what is it, $2 trillion now cryptocurrency market. They're all moving money around on blockchain. And ready? Whether you love cryptocurrency or whether you hate cryptocurrency, ready? We owe our CBDC future to the dreamers and to the innovators behind Bitcoin, blockchain, and all of the cryptocurrencies. They were the first ones. And basically government said, hey, this is a good idea. We can use this. And they are. So the MCBDC project will be available probably in 3 to 5 years. 3 to 5 years, we can also look at CBDC projects in Korea, Thailand, and elsewhere coming to fruition. And then you're going to have what I call the Big Bang. The world is going to change. You know, the world doesn't always change gradually. Sometimes it changes in jumps, right? And I think we're going to look at a Big Bang or a jump kind of change. And that change will be impactful on the US dollar because for regional trade, you're not going to need it anymore.
Let's also talk about some of the risks for banks with respect to disintermediation. So how do you think those risks can be addressed and how China is doing it? What is the model they're following? Is it a two-tier or is it account-based or token-based? How they're doing it?
Sure, that's a great question. And the reason is look, if anybody's read anything about CBDC, you're always going to read this. CBDC is potentially dangerous for banks because there could potentially be a bank run. And a bank run is where people literally run to the bank to take their money out, and that destabilizes the bank. Look, folks, now the same people who write that give mystical powers to CBDC for its ability to use digital to spy and to do all kinds of nefarious stuff. So the same people who say it's got mystical powers can't imagine an off switch to stop a bank run. That doesn't make sense. Now let's take this locally. Local banks will have CBDC. By design in China, what China has done, it's just like a credit card. It has a limit to how much CBDC you have on your digital wallet. So let's make this clear. If you've got the equivalent of $1 million in the bank, you're not going to be able to take all $1 million and convert it into CBDC and move it to another institution at the snap, at the snap of your fingers. It just doesn't work like that. So the concept that local banks will be protected by design of the CBDC is very important for people to understand. No central bank in the world, China, India, America, regardless of how different they are in what their countries believe, no central bank wants to blow up the banking system or adversely impact it to some severe degree, all right? Not gonna happen. So what they do is you build a CBDC, ready? So that it has limits in the transfer value. And so that they use this, as you said, two-tier structure. Very easy to explain. Ready? Money goes from the central bank to your commercial bank, and then you pick it up from your commercial bank so that the commercial bank is still in the loop. That's exactly what happens today with cash. Cash goes from the central bank, they drop it off at your local bank, they put it maybe in the bank teller window, or they put it in an ATM machine, and you get it. So the bank is still part of the currency flow and an important part of society. Now, it is true that for small islands, you can have what is called a single tier or direct CBDC. If you've got a small population, the central bank could potentially be the single bank for an entire small country. Very possible. And in those cases, the number of banks is very, very limited. They're usually directly related to the government, so it's not so damaging. But let's make it clear. India, 1.2 billion people. China, 1.4 billion. They're not going to, the central bank is in no way equipped to issue a currency directly to 1.4 or 1.2 billion people and manage that relationship, which means KYC, knowing who your client is, anti-money laundering. There's a lot of stuff that banks still need to do, and they're very important with central bank digital currencies, and it's all built into the design. Remember, no central bank wants to blow up their banking system. They want to protect it, and they want it, ready? They want to protect it, but that doesn't mean that the banks have a right forever to charge you to move money. They're taking away, they're making money transfer free. So they're taking from the banks, but they are ensuring that they still have an important societal role.
Richard, let's also talk about the hardware wallets and how China is using those wallets for CBDC payments in an offline environment. Last week, there was one report which said that the Bank of England is also exploring at hardware wallet for tokenized CBDC. So do we actually need hardware wallets for CBDCs? What's your view on
yes,
that?
Yeah, you really do. So here's the thing. When society makes this transformation to digital, we don't want to leave people behind. The whole goal is financial inclusion, not exclusion. So the good news is the price of the cheapest smartphone right now has come down to around $4 US, which means that there's a large part of the population that can afford a smartphone. And the answer is yes, CBDCs require a digital machine of some form, a digital storage. Now, China's super digital sophisticated, and of course, China has an aging population, and that population doesn't use a smartphone. And that population oftentimes is in poor rural communities, and they don't have the $4 for a smartphone. But what they do have, China has invented a small digital card. And don't think credit card. It's credit card sized, but in it, it has a display. In it, it has like a digital keypad, and it also has a thumbprint reader all built into something about the size of a credit card, but maybe 3 or 4 credit cards thick. And the price of this thing is probably sub $1. I'm not sure. I really don't know yet. I haven't seen the prices, but it's cheap. And what it can do is that it does not need a signal. So it doesn't need to be connected to the mobile signal, and you can make a direct payment to someone using this card. And that's financial inclusion at its best. And that's what societies like India and what the UK are going to have to work out. How do you make this so that you don't leave elderly and people who do not have smartphones behind? So let's jump again on that concept of phone-to-phone payment. We've got payment in China now, WeChat and Alipay. What they fundamentally do is they move money from a bank account on one side to a bank account on the other. The money is not on the phone. What you see on your phone is numbers. Well, that's just numbers of money in a bank account, right? So now that we're tokenizing money, turning money into digital, and for fans out there, I'm just going to say real quickly, China's CBDC does not use a blockchain. And that's important for people who are Bitcoin fans because they will object with what I'm going to say right now. If they think in terms of Bitcoin, they'll be wrong. If they think in terms of China CBDC, like I do, they're fine. Ready? So when we tokenize money, we turn it into a long series of zeros and ones that are only readable through decryption and keys. Let's leave it at that. What we can do is now when we use a central bank digital currency, when we say the money is on the phone, it means the digital representation of cash is digitally stored on your hardware device. Now that can be a phone. For large businesses, it can be a special logon terminal with extra security so that they can move large sums of money. Or it can be that little card for small sums of money for people who don't have a phone. But what we can do now, and this is a breakthrough, is because the money is on the phone, we can transfer money from phone to phone without a signal at all, which is really important. There's large portions of China that don't have signal. There is no digital signal. So how do we include these people? And we do it through this direct payment without signal. And that's going to be big for India. It's going to be big for places like the Bahamas that, may not, your cell phone tower goes out and you're on an island of 200 people. Yeah, you can get it fixed, but it's not going to be overnight, right? You got to get a guy on a boat to come out and fix it. So, there's the reality of the developing world, which says, hey, we live in a place where everything is not as immediate as, say, Shanghai or Bangalore or big city, right? So that's why this digital direct phone-to-phone payment without a signal is so very important.
That will also help a lot in getting access to payments for people who don't have access to internet. Let me come to Central Bank of Nigeria. What they have done is they have tied up with a private player called BIT, and they'll be using their expertise to launch their eNaira project, right? But if you look at the US's Fed project, right, the Project Hamilton, where Jerome Powell, he's saying that we don't need private player participation in the CBDC project. So how do you see this approach? Do you think a public-private partnership is needed for CBDCs, or the state has to run it?
Oh, absolutely. Public-private partnerships are the way to go. And I want to correct myself before I used the wrong term for the Nigerian's currency. It's the eNaira. I said ECD. ECD is Ghana next door. There's look, Africa's got two countries that are doing central bank digital currency, Nigeria and Ghana, and they're in a race to launch them. But let's go back. So large countries like the United States, like India, like China, have large central banks with ample skill internally to be able to understand how to build or to contract out or to work with central bank digital currency. No question asked. They certainly need private sector help. So in China, the PBOC, People's Bank of China, is working closely with Ant Group to build the central bank digital currency because they have critical database technology that's required. But I want you to watch the developing countries like Nigeria, like Ghana, like the Eastern Caribbean Central Bank. They don't have the skills on house. So they have to go out to third-party companies to investigate how to build this. And I want you to look at the disruption here. We've got three companies to make note of. BIT, which is building the eNaira, and it's also behind the Eastern Caribbean Central Bank digital currency, Dcash, okay? BIT is a tiny company. Then we've got the Project Bekong in Cambodia, and they used a company in Japan called Sorimatsu, which is a Swiss-Japanese group. But again, tiny little company building it. And then we've got NZIA, and they're building, but there's a story here beside my forgetfulness. And the story is interesting. What don't you hear in these companies? You don't hear the names IBM, Oracle, I don't know, a name of Google. What you don't see is the name of a well-known, respected, old school digital company. And I used to work for IBM. I love them. I like IBM. I worked there for almost 5 years. Great company. I'm not saying anything bad. But what you see happening is that with this new digital technology, the experts are all part of the cryptocurrency universe, and they're in little startup companies who hope to become the next IBM because they build CBDCs. So you really see a change of the guard. And frankly, for the project Beikong, there's a story floating around. I've heard it several times, but I can't confirm it. Nobody from the Cambodian central bank talked to me, or I haven't talked to them, but really they built Project Beikong with a small blockchain system because they went around shopping for what's called a RTGS, real-time gross settlement system. And when they went shopping for them, they're all provided by the big financial players, Finastra, whatever. They cost many, many millions. When they got the bill from the blockchain company to build it, it was tiny by comparison. So for a country like Cambodia that doesn't have the expertise in-house to go to a smaller company that has the expertise and can build these systems at a fraction of the cost of the large digital players, it's a change in the guard. And it's good for the developing countries who do this, because remember, I'll say it again, the risk reward for developing countries to build a CBDC, the reward is much greater for them than the risks. Yes, there are risks. Something could go wrong. No, I'm not arguing that. But the potential rewards for financial inclusion are great. And going out to a third-party company to acquire those skills is a great idea. No problem in the least.
Since there's also talk about stable coins kind of competing with CBDCs, right? How do you see both private cryptocurrencies, stable coins, and CBDCs forming part of the payment pie? And do you think CBDCs will compete with cryptocurrencies, or it's like you're looking at two different things altogether?
Two different worlds. And for the crypto fans out there, ready? Central bank digital currency will not kill crypto. People buy crypto because they don't want fiat currency. I get where you're coming if you're listening to me out there and you're a crypto fan, but I ask crypto fans to be at least welcoming that central bank digital currency can make currency transfer better. I know it's still on fiat, and I know crypto guys, people don't like fiat, but acknowledge that it's an improvement over the systems that we've got. So crypto fans, please acknowledge CBDC. Fiat fans, please acknowledge crypto, because that's where all this good technology came from. I try to make peace between two worlds that really don't like one another, and they fight a lot. And I see it online. I see it online all the time. So stable coins. So I have a prediction, and let's jump in with that. And my prediction is that because the US Federal Reserve is so far behind in its central bank digital currency project, some reasons it's behind are good, they're careful. Some reasons they're behind are not good. They really were not paying attention and didn't do any, for a big central bank, they didn't do much research. If you look 2014, 15, go back, right? The research coming out of Sweden, the research coming out of the BIS, the Bank for International Settlements, was great. They were looking at central bank digital currency. What research was coming out of the Fed? Almost none. They really, as we say, took their eye off the ball. So my prediction is that the US, in order to catch up, is going to highly regulate some stable coins and allow them to launch into the marketplace, but only when they're heavily, heavily regulated. KYC and AML up to whatever a US bank would use, and then they're going to have real protections on the reserves that stable coins have. As you're aware, some stable coins like US dollar Tether are claimed not to be so stable because there are claims that Tether does not have adequate reserves for the amount of outstanding Tether without getting too complicated. So the US, in my estimation, is going to make laws that allow for stablecoins and will allow private stablecoins to do the job of digitizing the dollar until such time as the US dollar can be digitized through central bank digital currency. Let's make it clear. Stablecoins are run by companies who want to make money. And if you're using their product, they're going to find out how to make money from you in some way. That's not necessarily bad. WeChat and Alipay are both private companies. That's great. But I want to make it clear. A central bank digital currency, which is digital infrastructure provided by your government, is looking out for you more than a stable coin. Okay, so, so I think that if the US does this, it's fine, but I think that this is not a long-term solution. And I think that here's where China ended up. So China ended up with most of its retail currency payments handled by WeChat and Alipay. They're great companies. But if you were a central bank and your money was controlled by two companies, would you be happy if you were a central banker? Unlikely. And America now risks the same thing where they'll launch stable coins. First one is DM by Facebook. We all know about Facebook. I don't need to say anything more. What Facebook is doing with DM coin. I do. But of course, everybody who knows Facebook knows that there's always some problems with questions of what they do with the data. Let's leave that for now. But where the United States may find itself is in exactly the same place that China does, where you have 2 or 3 major stable coins, which now companies or corporates control the US dollar more than the Fed does. And that's not an enviable position to be in. But I just think it's interesting because I think the China experience is something that the US can learn from if they go this route of stable coins. And I'm predicting that they're going to do it.
Let me also look at some of the programmability part of CBDCs where intelligence can be built into CBDCs. And if you can share some insights from the Shenzhen trial, right? Richard, I would love to hear your views on that.
Sure. So look, there's 2 ways that China's central bank digital currency is going to be what I call smart. Now, the first one is the one that people who know cryptocurrencies and Ethereum are very familiar with. And this is the basis of the DeFi movement, the decentralized finance community. And these are smart contracts, meaning that you can make a digital contract that has intelligence built in. And that intelligence can be, okay, I'm buying a life insurance policy and every month you have to pay, and that's built into the contract, and maybe you see that automatically on your digital wallet. That exists. Smart contracts are part of China's central bank digital currency. However, because they're complicated, that ability will not be turned on for a few more years. Okay, so the one way they're smart, which is smart contracts, it's part of the build, but we'll see it in a while. The second way that they're going to be smart is through using big data. So you can basically use big data or controls on the currency to make it do stuff that is not quite a smart contract. I know that's a little, now when I say big data, I mean the data or that is contained within the coin. So let's look at the Shenzhen trial. When people used or got this Hongbao, this red packet for 200 RMB, they were given 200 RMB. Now, the RMB had limitations. The first thing, you couldn't take the RMB, digital RMB you were given, and you couldn't put it into the bank. So what did that mean? That meant that the currency that they sent out had to have a block or a limit, a digital limit that said, hey, you can't just take that 200 RMB and put it in your bank. We want you to spend it and buy stuff, right? That's number one. Number two, there was a time limit. It said, okay, we have to use, or if you get it, you have to use it within 2 weeks when the trial is up. So it had a trigger for, I have 200 RMB, I can't put it in the bank, I have to spend it in two weeks. Obviously, you have to use it at certain stores that are equipped with the digital RMB. And there was, oh yeah, you couldn't transfer it. This came later. You couldn't transfer the digital RMB from, say, the Beijing trial to the Shenzhen trial. It had a regional limit. Let's use that one. I know there's another one for the original Shenzhen, but I forget it. But the point is this: money is programmable in the sense that it has the ability to say, we can do things with this money. Now, why is this good and bad? There are people who are going to look at this, and they are going to say, especially with regard to China, and they are going to say, it's bad because China, the government, can control your money. To which I reply, no, this is not new in China. China and the US all control digital money. In other words, your credit cards, your digital bank accounts, all have an element of government control, and CBDC does not necessarily grant them mystical magic-like powers that are far, they're maybe a little beyond, but they're not vastly beyond. But here's the good, so that's the negative. I took that first. Let's look at the positive. What you see is now how we can use digital payments for disaster relief. So here's 1,000 RMB to all the people who live in this certain province where flash floods hit. You have to spend it within a certain amount of time. You can't put it into the bank. You have to spend it within the region because we want to help the region recover quickly. So that's like an example of a good use for that. Where is that happening right now? In India. With the launch. Thank you. Yeah, you got it. So e-rupee is really an example of the good that can be done with programmable digital money. And so my message for folks out there is, I don't want you to focus on, oh my God, central bank digital currency, the privacy, oh, the government is going to take over your accounts. Oh, central bank digital currency, it's bad for the banks. You could have a banking disaster. There's a lot of fear mongering going on. Your digital currency future is a good one, and that's the important thing. So yes, I consent that governments could use these features to do bad. I'm not going to argue that. That's true. It is objectively, from a technical perspective, possible. But, and people accuse China in particular of doing that or having the will to do that. To which I say, China has had digital payment, WeChat and Alipay, since 2014. And there is no documented evidence that the government has ever cut off large segments of the population or particular groups for any reason. Certainly bank fraud, tax cheats, or other bad people have certainly had their accounts frozen, just as people in the United States have their bank accounts frozen if you don't pay the IRS, the Internal Revenue Service, for the tax. So we got to look at the positives that central bank digital currency brings through programmability and balance the positives for aid payments and for helping people and the negatives, and balance them, and have to have some faith in our governments that they're going to do the right thing. And that, ready, the last thing is that the CBDC designed for your country will have built into it the values that your country has itself. I get it. Not everybody is going to use China's CBDC. The design in India will be different to China's. The design in Sweden already is. So they're not all the same. So that's the whole concept about programmable money. It's a big feature. It has some controversy, but try to think about the good that it can do for humanity.
Right. And I think the concerns about privacy are kind of overblown to a great extent. Let me come to one technical aspect. Do you need blockchain for CBDCs? What's your view on that? China is not using blockchain, right?
Absolutely. So here's the problem. Look, blockchain is wonderful. I used to sell blockchain when I worked for IBM. I love it. I got great stuff to say about blockchain. So please, but brace and work with me here. Let's look at China as an example. China's Alipay, when they have their busiest day of the season for what's called Singles Day, 11/11, the 11th day of November, right? Their processing system, Alipay, will process 500,000 transactions per second. That's the speed required on their network. So let's put that into perspective. The Visa and MasterCard networks in the EU and US roughly transact at 50 to 70,000 transactions per second. Take away a zero. All right. Now we've got the Ethereum network. The Ethereum network is at around 1,000 transactions per second. And I can't remember if Bitcoin is 7 per second or 7 per minute. Bitcoin is really slow, but that's okay. It's an older technology. But the point is, modern blockchain, the newer technologies might be able to handle it. Ready? Crypto folks. Ethereum 2.0. Love it. Ethereum 2.0 is said to handle hundreds of thousands of transactions per second. Respectfully, it's not launched yet as real operable software. Point number one. Point number two, banks, central banks, do not like to be on the bleeding edge of technology. In other words, if you have a new blockchain protocol that does a tremendous number of transactions per second through sharding, through whatever means, they exist. I know they're out there. Central banks are conservative. They're not going to be the first one. The Central Bank of India is not going to be the first one to try out your new blockchain protocol to run a country's money supply. Just not going to happen. So, ready? China went non-blockchain for speed. That's especially true when they started all the research back in 2014, 15, and ongoing. Newer countries, smaller countries, blockchain is real. Smaller countries don't need that high transaction volume, and some of the current systems can handle it, no problem. Going forward, as blockchain gets faster, you'll see more used. But right now, for a big country like India, like China, right now the tech is not quite up to it, and I know that there are people who are disagreeing with me. I get that. So if you disagree with me, that's okay. But remember, central banks are conservative. They're not going to use they're not going to be the first ones to use something. That's the important thing that I say to those who say, my blockchain protocol X, Lightning Network, there's a zillion of them. Oh, they do X number of transactions. They can do it. Well, maybe.
Smaller countries like, say, Cambodia, they're using Hyperledger Iroha for their Bakong projects. It makes sense, but for nations like China and India, where we have significant amount of population and transactions going in billions, blockchain will not suit our purpose, right?
Yeah, it will someday. Look, all the technology, all I know is that whatever technology we have tomorrow is better than today, and someday it might. But right now, looking at what we've got for established protocols, I don't see it. But I do see it for smaller countries. I think it's great. And I love blockchain. I'm not, people are like, you don't like blockchain. No, I love it, but you have to be sort of dispassionate and look at what it does well and what it does not so well. And that's unfortunate, but that's the truth.
Let me come to my last question, and it's about the CBDC race. There were a few reports stating that Britain has to launch CBDC now or risk losing 40 billion worth of pound business to the EU, right? So how do you think, does any country needs to get into a CBDC race? How do you think the approach of getting into a race and launching CBDC first?
There's no race. Okay, so I love that article. I thought it was great. I saw it too, and I don't know where the 40 billion pound or whatever figure came from. I have to look carefully at that. But still, look, countries need to make sure that their CBDC does two things. First, supports the values of their country with regard to privacy, and the second is that it is inclusive of their people. The concept of my CBDC is first before yours. I don't think there's a race going on. I think that you should build for your people, for your nation, so that it helps the most number of people and not have this concept. I see this all the time. By the way, China and the US, the AI race, right? You know, there's this concept of technological races. It's not about the race. It's about what good can technology do for your country. And that's the primary focus. So should the UK make a CBDC? Yes, in my view, it's good for financial inclusion. And by the way, it is wrong to think about financial inclusion being a problem of the developing world. Ready? I hear this all the time. This is the US Fed. The Fed said CBDCs are a problem looking for a solution. Period. Ready? The Fed's own statistics are that 22% of the US population is unbanked or underbanked. Underbanked meaning they have to use check cashing or other non-bank services for their financial life. So the US is arguably one of the better banked nations in that it's got branches all over, but only in nice neighborhoods. You go to a bad neighborhood, you can't find a bank, or there are problems with reaching the lower income levels of American society. So don't think of CBDCs as helping the unbanked in developing nations. It's a real thing for the UK, it's a real thing for the US and the EU, and it will help. It will also help something else. The UK can further its digital transformation. Society is going digital. The faster that we get digital currency, the faster we can develop digital services, expertise in your native country. And that's what China, this is where I say, learn from China. China went cashless. The services available to me as a resident today are incomprehensible to me from 2010 when I moved here. And that's what you want for your country. You want that explosion of innovation, an explosion in digital services, because it helps the GDP. 1% per year GDP in China devoted to, attributable to digital. A little bit off now, 0.8, 0.7 in recent years. But big gains all through digital. So is there a race? Not between country and country, but there should be a motivation to do this because it's good for your people and it's good for your further digitization, which will bring real GDP benefits. And China did it, is doing it. They're first in this. And I get that there's a lot of negative China sentiment. I understand that. I'm not going to even go there. But do not dismiss learning from China, because their path to digital currency is the same path that many other countries are going to take, and you can learn from them. And that's the important thing. So that's the message. Learn from China. There's good things there, and there is no race. But in as much as CBDC helps humanity, the faster we get it, the better for us all.
Thank you. Thanks, Richard, for your wonderful insights on CBDC, the global landscape, and what other countries can learn from China. Right. Thank you. Thank you for your time.